turn now to the latest business news and a gloomy outlook for the global economy in 2020. Our business editor, Stephen Carroll, has the details. Stephen.
Naomi, this is the latest forecast from the World Bank. Looking ahead to what we might expect in 2020, it only sees a slight improvement in the global growth rate in the coming year. That's after 2019 was the weakest year since the financial crisis. 2020, the bank says, will be better for emerging economies than developed ones. It's expecting growth for the United States and the Eurozone to be slower this year than last year, whereas the picture is brighter for countries like India, where growth is expected to rise to 5.8% this year. Overall, emerging and developing economies expected to grow by 4.1%. I've been speaking to one of the lead authors of this report, Francisca Unsorga from the World Bank, about the contrasts in their predictions.
Global growth reached a post-crisis low of 2.4%. Emerging market and developing economy growth reached a post-crisis low of 3.5%. In the last couple of months, we have seen signs of stabilization. Business surveys have improved a bit. Some of the export numbers that have recently come out are a bit better. There is some signs that the trade tensions are easing. So we do expect a stabilization in 2020, but that is a pickup, an inching up of global growth from 2.4% in 2019 to 2.5% in 2020. And even that is a very fragile recovery. It essentially rests on a rebound in emerging market growth to 4.1%. And that in turn is itself driven by really strong rebounds in 8 emerging markets and developing economies that are coming out of a very difficult 2019. So there are big downside risks to this global growth outlook.
And you can see that full interview with Francisca Unsorga from the World Bank in People and Profit on air at 12:45 Paris time today. Well, after a volatile week on the markets, let's take a look at what's happening to the price of oil today. Now, we had Brent crude, the international benchmark, hit a 3-month high on Monday. That's, of course, after the events in Iran and Iraq, hitting over $70 a barrel. But after comments from President Trump that were seen as pulling back from an escalation of tensions with Iran, the price of oil slumped. On Wednesday, it's now down around $65 a barrel, down slightly on the day. WTI moving in the same direction. These are levels last seen in mid-December, so the markets seem to have wiped out all of those gains of recent days as tensions appear to be easing between the US and Iran. On the stock markets, they've had a pretty roller coaster week as well. The Nikkei in Tokyo finishing the day up 2% today. It was down 1.5% yesterday. Gains across the board fairly significantly. Seems to be optimism reigning on the markets today. Now, Uber has changed the rules for its drivers in California in an effort to escape the effect of a new law targeting gig economy workers. The changes include drivers being able to see the destination of rides before accepting to pick a passenger up, while those taking Uber will no longer see a fixed price for their journey, but a price range. The California law requires all workers involved in what's called a company's core business to be classed as employees. Uber drivers are currently treated as independent contractors with fewer rights, with the companies fighting to keep that status. It's estimated that classing Uber drivers as employees would cost the company around $500 million. Turning to India next, and tens of thousands of workers took part in a 24-hour strike, disrupting transport and banking services, among others. The workers are angry about the government's privatisation plans and the growing impact of an economic slowdown on jobs. Ellen Gainsford has the story.
They say that India's being sold off. These protesters are angry about the government's plan to privatise natural resources and state assets. After 10 unions put out a call, millions of Indian workers went on strike.
Government is doing all possible things to sell this country, and working class today is on roads to tell we will not allow the sale of our country.
Prime Minister Modi plans to sell off companies including Air India, Bharat Petroleum Corporation, and the Shipping and Container Corporations of India. Unions say this will lead to the loss of hundreds of thousands of jobs. But for the government, it's a necessary move. It says the companies are hemorrhaging money and hopes to bolster revenues ahead of this year's budget. Delhi is projecting 5% growth this year, a sharp fall from the 6.8% it reached in 2019, and the slowest rate for 11 years.
The workers' strike is basically to save India from the disastrous policies of the Modi government, which is basically selling India out, selling the most profitable concerns, selling Indian railways is unheard of.
The 24-hour shutdown has disrupted much of India. Rail and road traffic was affected in Assam, West Bengal and Kerala states, while protesters took to the streets of New Delhi and several state capitals.
A number of British banks have stopped taking orders from customers for foreign currency after a cyber attack on their provider Travelex. The ransomware attack was discovered on New Year's Eve, knocking out the travel money firm's computer system. Staff at Travelex cash desks in the UK have resorted to using pen and paper to serve customers, but it's now also affecting the company's supply of foreign banknotes to the likes of Lloyds, Barclays and the Royal Bank of Scotland. Finally from me, a new rival to Netflix is hoping to win viewers with TV shows that are just 10 minutes long. Quibi is targeting younger smartphone users with bite-sized videos. Major Hollywood studios have already pledged $1 billion in funding for Quibi, and stars including Steven Spielberg and Jennifer Lopez have signed up to star in its shows. It'll be joining a crowded field of new streaming services after Disney and Apple joined the market in 2019. Perhaps no surprise, the streaming industry expected to be worth nearly 620 billion euros in the next 5 years. I think, Naomi, we're going to see a lot of new companies joining in this market.
I was thinking exactly the same. Absolutely. Crowded market indeed. Stephen, good to have you in here with us. Thank you.